Good afternoon and welcome to this bite-sized session on ethical decisions in an accounting environment. I am Catriona Hyde. I am a chartered accountant and I'm a senior lecturer at the University of Lincoln. So today I'm going to give you a little bit of a flavour about some of the ethical decision making that accountants have to make. Now, having worked as an accountant, obviously I know some of the difficulties that you might face. So if you were studying accounting at the University of Lincoln, one of the things that we would talk about is the sort of conundrums, the sort of decisions that might face you on a regular basis as an accountant. So every accountancy body, there are different accountancy bodies. So there's ICAW, which I'm a member of. There's ACCA, there's SEMA. There are some others as well. They have a code of ethics. But essentially within the code of ethics, there are a number of elements that you have to use to make ethical decision making. And the idea is that the code is quite flexible. It's not the sort of code where you are told exactly what to do in every single situation. You have to use these rules to make the best decision possible. So if you can see there on the right hand side, every accountant has to act with integrity. And what that means is that they have to do the best that they can for their clients. They have to essentially make good decisions wherever possible. So they're not allowed to mislead people. They're not allowed to lie. They have to act as a good, independent person. They also have to be objective, if you can see there in the bottom right. So it's not possible to give advice objectively to someone if, for example, you have too close a relationship with them. So you need to make sure as an accountant that you are objective and that you're looking at the information that's available and advising your client based on that. Now, one of the most difficult elements is that you have to act with professional competence and due care. And that sounds like a really easy thing to do. So essentially, you have to do a good job and you have to be careful. But if you think about it, when you start to work as an accountant, so you might study and do a degree, and then you'd start as an accountant, but you'd only be a trainee, and you actually still have to show professional competence and due care as well. So one of the most difficult things that can happen as a junior accountant is that you have to think, well, really, do I know how to do this? And sometimes that means that you might have to say no. So, for example, I've never ever worked as a tax accountant. I've done a couple of exams in it, but I've never worked as a tax accountant. And regularly people ask me for tax advice. And I have to say no. Because if I was to give them tax advice and it was wrong, I would actually be breaching my code of ethics because I just don't have the skill to do that. One of the kind of more general things that an accountant must do is they must show professional behaviour. Now, in some ways, that sounds really straightforward as well. So you have to act like an upright person. But one difficulty that might happen is if we've got situations where accountants have perhaps done something illegal. So say, for example, when somebody was 12, they stole something from a shop. That obviously wouldn't be something that was professional behaviour, at which point they would have to go to the accountancy body and they would have to essentially decide, the accountancy body would essentially have to decide whether or not that person is reformed. Now, if it's something like somebody stole something when they were 12 and they haven't reoffended again, it's really fairly straightforward because essentially, they can explain what happened and explain that, perhaps they were very young and they just made a mistake. What tends to be a bit more difficult is if you make a mistake when you're 18, 19, 20, and then you are kind of saying that you're going to act as an accountant. So, for example, if somebody was to have a fight at 19, 20, Would that be professional behaviour that would be appropriate for an accountant? Now, ultimately, it's going to be up to the accountancy body to decide that, but it's just something that's worth thinking about before you even start about pursuing a career as an accountant, that actually these codes of ethics go considerably wider than just the working as an accountant. And one of the others that's really difficult is confidentiality. It is not appropriate to be talking about your clients or talking about whether or not they've made lots and lots of money this year. And again, everybody starts from the start position. Well, of course I wouldn't talk about my clients. I wouldn't want to tell anybody what's happening. And it sounds really straightforward until you get a phone call from your mum on the way home from work, and your mum says, "How was work today?" And you say, "Oh, it was awful. Something happened today." And you start telling a story, and then you realise, oh, I shouldn't be telling this story. And you maybe have to stop partway through. And I mean, most of you probably talk to your mum pretty regularly and tell her what's going on in your life. And you might actually have to decide that sometimes you're just not able to do that. Or you're not able to tell your girlfriend or boyfriend exactly what's happened in your day. Now, you can tell them in general terms. It's absolutely fine to say, I used to work on a client, they were a big construction company and they built houses. However, if I name that client and I tell you any information about it, that would breach my code of ethics. So as long as they can't identify who I'm talking about or which company I'm referring to, and as long as I'm not giving financial information, it's absolutely fine. The other place where confidentiality starts to get really difficult is socially. So if you think about what's going to happen, you're going to go and work as an accountant, you're working in a big company, there could be 20 people there could be 100 people there. And it's really common for it to be really sociable. So the companies I used to work for used to do Friday night drinks where we go to the pub afterwards. And I had a lot of friends there. Now, the majority of the time, my friends knew where I was working. They knew which companies I was working with at the time. And it's very easy for someone to let out a bit of information, which is sort of, oh my goodness, you'll not believe what my client did. Now, obviously, that would breach the code of ethics, so you need to be really careful about what's said, because you shouldn't be talking to your friends about it, but also you never know who else is listening. So if you're talking about something publicly, someone could overhear and you could get into a lot of trouble. So these sorts of things are just worth thinking about on a day-to-day basis, the sort of challenges that accountants might have. Now, if we look at this slide, these are the key ethical threats that we consider that could potentially be a problem for an accountant. So the first is a self-interest threat. And essentially what a self-interest threat means is that you might have a situation where you are interested in how your client or the company that you're working with are going to do. So to give an example of this, if your dad owns a company and you are giving accountancy advice, you have got a bit of an interest in that company because your dad owns it, or if you owned part of the company yourself. And that wouldn't be very appropriate. Essentially, you need to be independent. So a self-interest threat could be something really straightforward, but you need to avoid it if you can't manage that threat. Another example might be, say, for example, you were giving a company advice and they offered you a job. Now you're in a situation where you have got a self-interest threat because you're going to go and work for that company. So the advice that you give them might be slightly different and might not be fully independent. I used to get offered jobs fairly regularly when I was working with companies. It's something that happens as you're a newly qualified accountant. If you work for clients and they like you, it's quite common for them to say, well, would you like to work here? It does happen. So that self-interest threat is really quite a real problem. Now, in my case, I always knew that I didn't want to be an accountant long term, that actually I wanted to teach. So that self-interest threat wasn't very real for me. So it was absolutely fine for me to continue to do the work because I would just say, no, thank you. I would always let my employer know so that they were aware that there had been a potential threat, and I'd move on. One of the other threats that's considered quite a big problem for accountants is what we call a self-review threat. And a self-review threat is essentially where you check your own work. Now, if, for example, I've given your company tax advice, and then I come out to check it the following year, and it turns out I made a mistake, I'm not very likely to tell you that I made a mistake, am I? I'm more likely to try and cover that up. And that's what the problem with self-review is. If you're checking your own work, you're less likely to tell anybody. And the same comes even if it's your company. So if your best friend perhaps works in accounts as well, and they did the work last year, and you come out and you're checking their work, you're maybe less likely to act with integrity. So self-review threats are very real, and as a result, you need to be quite careful as an accountant to make sure that they don't occur. So it may be that you say, you know what, I will give you tax advice, but I'm not going to give you other advice as well. So there's ways of managing it, but it's something that you have to be aware of. An advocacy threat is where you start to advocate for your clients. So essentially you start fighting their battles for them or promoting them. And what that means is you might be saying, oh, you should hire this client of mine. And obviously, if you're starting to help them make management decisions and you're starting to work in their favour, it's very hard to argue that you're still fully independent. Now, a familiarity threat is when you've got a situation where you've just got a little bit too close to a client. And that might be where you're advising company that your dad owns, or your sister owns, or your best friend owns, or perhaps if you were to audit them. So an audit is a check of the financial statements to make sure that they are true and fair in all material respects. And essentially what that means is you're doing a sort of sense check of how a company have performed. But you shouldn't be doing that for your dad's firm because you wouldn't be independent. Now, sometimes familiarity threats are really, really easy to see. If there's something like your dad asks you to do, you just say no. What's much more difficult is you could have a situation where you perhaps work with a company for a long period of time. And over time, you become very friendly with them. You know, you're going to like the people you're working with a lot of the time. So you're working with them and perhaps you go for dinner with them sometimes, or perhaps you play golf with them or celebrate with them. And it's a really, really hard balance to decide at that stage when the familiarity threat arises. So just think about it for a moment or two. Do you think it's appropriate to go for dinner with a client? Do you think it's appropriate to play golf with a client? And sometimes it's good business sense because actually what you're doing is you're building up a relationship so that you can work together very well. But at the same time, you need to kind of assess that balance. And that's something that accountants have really struggled with in the past, is identifying where that line of familiarity actually arises. And there's been a lot of scandals where people have said, well, the auditors were too cozy, or the specialists, the accountants were too cozy with the client. And that's why there's been problems. And the final threat that's broadly recognised is an intimidation threat. So an intimidation threat could be something like they tell you to give them the right advice or they will hurt somebody. But that's not something that really happens in real life. I mean, I'm not saying it's never ever happened, but I've certainly never heard of it happening. What's more likely is they'll say something like, if you don't give me the report I want, I will not give you any more accounting work. And that's quite a difficult one because that is a threat and that is intimidation. They're trying to intimidate you to give them exactly what they want by threatening to fire you, essentially. And nobody wants to get fired. Nobody wants to hurt the relationship with their client. So that one's a really difficult one to manage. Now, I haven't had it happen very often, but I have had that one happen to me. And it's very, very difficult to work out what to do. But if we go back to the code of ethics, we have to act with integrity. And as a result, if something like that happens, really all you can do is step down. Okay, what I'm going to do now is I'm going to talk to you about 2 ethical problems in a little bit of detail, not a lot. But the first is bribery. Now, bribery is essentially where somebody offers you something in exchange for something they want, and it's illegal. So generally it's cash. Now, in the UK, bribery is not all that common. It's not one of those countries that we really struggle with bribery. I'm not saying it never happens, but it's not a major problem. And one of the difficulties is if you are a UK company and you use bribery in a different country, you're still responsible for it here. So, for example, say you've got a big company who are doing something around the world, and in a country where perhaps bribery is a bit more common, they give some money to an official to maybe get a license or a permit to get something done. Now, in those countries, sometimes that's just fairly standard practice, but if it's bribery, it obviously wouldn't be an appropriate thing to do. So, although bribery isn't explicitly mentioned within the ethical standards or the code of ethics, it's pretty clear that if your clients are doing this, they aren't acting with integrity. And if you were to give them any advice on how to do this, or you were to become aware of this, you wouldn't be acting with integrity. So if something like that happened, you would have a duty to disclose that to the appropriate authorities. And actually, even though there's always confidentiality, that's superseded if there is something illegal going on. So if there's something illegal going on, you can tell the police or you can tell the appropriate authorities about it. Okay, now the final one I want you to think about is gifts. Now, several years ago, it's a long time ago now, I was working at a client and it was my birthday. And I had worked there for quite a long time. So I had literally been working at this client for 6 months, and I went to their office. I had my own desk there because I was there so often. And on my birthday, they gave me a present. It was really very nice of them. They gave me a card that was signed by everybody in the finance team, and they gave me a birthday present. And I want you to think, is that appropriate? Now, you might be starting to think, well, is there a familiarity risk here? Because actually, how friendly with your client had you got when you've got an office and when they buy you a present? And you might be starting to think, well, there could be a self-interest risk here, because essentially you've got a situation where you have got somebody who's giving you a present. So they're trying to bring you onto their side. And as an accountant, it's up to you to decide whether or not that's the case. Now, if they give me diamond earrings, yes, it probably would be a self-interest threat. What they actually gave me was some promotional material from their company. So they gave me a mug and they gave me a little dog, a little cuddly toy, essentially, which was really kind of them and I really appreciated it. But honestly, for a mug and a cuddly toy, it wasn't going to reflect my self-interest. And at the time, I was relatively junior. So if you're a bit more junior, and if you've disclosed it to the partners, the people who are in charge, it's less likely to be a problem. But every time you get a gift, or every time somebody offers you something like that, as an accountant, you'd have to assess and you'd have to determine whether or not you think that's going to put pressure on your code of ethics. So hopefully that just gives you a flavour of some of the decision making that an accountant might have to make from an ethical point of view. And I hope you've enjoyed hearing from our bite-sized video today. If you have got any questions and you are live today, feel free to put them in the comments. And thank you very much for listening. I don't see any comments coming through, so I'm going to assume that there aren't any. So I'll just thank you for your time and thank you very much for listening. I hope you've enjoyed this video from Lincoln International Business School at the University of Lincoln.